TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have? Well, we've got a bounce. When I left you on Thursday, we had just taken our cash on a rather big move in Boeing. We sold our puts on Friday. We were short the daily newsletter Tesla at 357, 358, something like that. Covered at 325. What's it trading at right now? Maybe we've got it up here. 333. So you've got kind of a little bit of a bounce. We're at 349, which is up 5 on Boeing. I was expecting a bounce, probably not as big a bounce out here as we saw. I have a question already in the den, which is asking me, what do I see? We got pretty much down to where I thought we would be around as options showed. My guess is everybody went short. We're now getting the bounce off that short. I didn't think we were going to bounce this much. So I didn't see that much shorting coming in on Friday. I'm going to look a little closer tonight. But we're up 24 on the S&P cash. My thoughts are that we are going to kind of bounce around the 2680 to 2700 range for a little while. And that's going to allow us the next move, which is either higher or lower. As I said, I don't know, was it over a week ago? I was expecting the market to bounce up and down for a little bit, and I was going to go opposite the first way of the breakout. Well, that breakout was higher, so we went ahead and shorted a couple of stocks in that, came back down, covered our shorts. And here's where I think we just got kind of a little bit of a bounce. Volume so far today is not all that exciting, and this does not mean I'm bearish. We got, what do we have on? 2 billion shares on the NYSE. If we look at the CBO combined volume, that's about 3.9 billion shares so far. We've been, kind of a 6-7 billion share total day has been kind of a light day here. So we're kind of in that vein. So my guess is that we don't have a lot of volume down, which we didn't on Friday. We don't have a lot of volume up today so far. Maybe that changes by the end of the day. But if we're looking at tracking what I see now, is probably some kind of centering on somewhere between 2680 and 2700. And that's probably going to let a little bit of the juice out of the market. And we're going to probably see a little lower volatility, and then maybe that takes a week to get through, and then we're probably going to see some kind of move. But I want to see some kind of signal. All we have now is kind of a bounce in a downtrend, and we need to get and pull back a little bit on lighter volume. Popping up on lighter volume doesn't do a lot for me, but at this point, not a lot of charts showing a lot of room like I saw last week in the shorts for Tesla and Boeing that seemed to be fairly quick, and we took our cash and ran. Longer term, I am bullish, and in the longer term newsletter, we've got a couple of positions that I've got long. There's two things I have in those long positions, though. And that is 9 days to cover in one and 25 days to cover in the other one. A lot of people are betting against it. And the nice thing about having a lot of shorts is if it does go lower, those shorts, especially in these stocks, every time it goes down a dime or a quarter, they're going to be thinking about whether or not they can cover these short positions, because it has been kind of a dry road for them for a while in these things. I do like the stocks. I like them better in that I've got some insurance to the downside with those shorts. And on the upside, if they start performing or outperforming the market, which one is already doing that, I'm going to have a ton of people on any kind of major bounce that we'll have to cover. And that will probably give us the kind of room and move that'll be good for, I don't know, 25% on this one. So I am bullish. I don't think that there's that much room, though, in many of these stocks, i.e., I think, if we're talking about the market being up 1% a day, down 1% a day, there's just not a lot in that. But we'll talk about a few things. Yep. We're talking about it. Like I said, another question in here is seeing a lot of stocks not bouncing. CAT, MMM, 3M, McDonald's, XOM, Procter & Gamble, Coca-Cola, and others. And I think this just means we need to consolidate out. And there's some more thoughts I have along this line. And we'll get to a little bit of news, and then we'll get to why some people call me the counterculture trader. But what I'm really looking at is probably a little deeper than that. But let's get a little history, and then we'll talk a little bit more about some of these other stocks that are failing to bounce. But we'll get moving.
Then it's all just a little bit of history repeating.
It is nothing but history repeating, or at least rhyming. On this day in 1963, the hula hoop, a hip, swiveling toy that became a huge fad across America when it was first marketed by Wham-O in 1958, is patented by the company's co-founder, Arthur Spud Mellon. An estimated 25 million hula hoops were sold in its first 4 months of production alone. Following the hula hoop, Wham-O continued to produce a steady stream of wacky and beloved novelty items, including the Super Ball. I had one of those. A water wiggle. I had one of those. Silly string. I still have that. Slip and slide. There's nothing more fun than having some nieces and nephews and some silly string and act like you're going to sneeze real hard and shoot the silly string out on them. That's the best in the world. Slip and slide and the hacky sack. But let's relive a little bit of the hula hoop fun.
Hula hoops in the spotlight again. Whether it's hula hoop champions on stage or a bunch of people hooping it up on the beach in California. You don't have to be a champion to have fun with a hula hoop. You don't even have to be on stage to have fun with a hula hoop. You can be on a surfboard, or with a group of hoops in a park, or go ahead and be a hula hoop champion. Just for fun, drop everything and pick up on a hula hoop from Wham-O.
Well, we're going to go into the break here. Should be going into the break. Just barely hear the music now. Anyway, we'll be back in a minute. I'll talk a little bit more about what I look for to hit the home runs and not singles. And that is a bit of divergence. Kind of the Oscar talk this morning made me think of it. So we'll talk a little bit about that when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I wanted to talk a little bit about this. We'll get more into some of the stocks that are not bouncing now. But one of the traders in the den has gone to calling me the counterculture trader. And it's not so much the counterculture. It is generally the people that, well, in the case of, I'm showing the screen of Rotten Tomatoes on Death Wish, the one that came out this year with Bruce Willis. But almost the exact same thing happened in 1973 when the original movie came out. Every reviewer deadpanned it, said it was a horrible movie. It was one of the biggest movies of the year. Right now, the Death Wish is getting 15% good for big reviewers, but 85% for the people that went and saw it. Now, how can these two people have seen the exact same movie and come away with a very different view of the movie? Well, the answer is that the reviewers are very much like stockbrokers. They're very much like the people at CNN. They all live in the same area. In fact, reviewers, 95% of the reviewers live in 3 towns, Chicago, LA, and New York. So they have a very different view of the world than I have here in Clearwater, Florida. They pretty much will pan any movie that shows the military in a good light. Anything that has to do with shooting, probably going to get a 65 at best, maybe 70. But you know what? There's just as many movies where the audience said 10% and the reviewers said 80%. But when I look at stocks, that's kind of where I'm at the same thing. I want to see where everybody in the CNBC viewing audience, not the audience, the commentators, man, they're all over this thing. They love this movie, and everybody else is going, huh? In the rest of the world, the rest of the United States. Or the contrary. They hate the stock, but everybody I know says that they're using the product. In movies, there's not a lot to gain from people doing it. I think that there's a reason to do it on Wall Street, which is you want to badmouth the stock that you want to buy while you're buying it if you're a big Wall Street firm. And, of course, if you're short the thing, you want to rain all over it. But I'm not so much counterculture as I want to see wide divergence between the people that, quote, quote, think that they know it all, and generally they don't. In Reminiscence of a Stock Operator, there was a great quote. And it was, I'll just read it here. The firehouse effect is a notion attributed to veteran market trader Market O'Connell that firemen with much downtime who talk to each other for far too long come to agree on many things that an outside impartial observer would find ludicrous. And some psychologists got together and they did a study, and they found some firehouses where everybody was kind of conservative, and another one where everybody was kind of liberal, and they moved a few of the liberal people out into the conservative and a few of the conservative people back into liberal ones, and asked them over the years, over a several years, their views on certain things. And it was very telling how quickly, in a couple of years, a lot of the people's views changed when they moved from one firehouse to another. So there is this thing called the firehouse effect. But that's kind of where I'm saying a lot of times when I look at things. Someone asked me over the weekend again about my call on Amazon last fall, when I just said, literally everybody, I think everybody that could be long Amazon was, and I think it went from what, like 970 back to mid or lower 700s. And of course it's $1,500 now. You get that all the time where literally there's nobody left. But at the same time, I like to look for stocks where everybody in Wall Street says that there's just literally there's no way this stock can go down. And, of course, a lot of other people on Main Street think completely different. But that's kind of where I look for those kind of things. When everybody's bullish, especially when I find them on Financial Infotainment TV, and they can see nothing higher, that's it. When they, like last week, are predicting the end of the world because of tariffs on iron and aluminum, I think that those guys also are probably in that firehouse. They are so used to everybody repeating the exact same thing that they really can't think that things could be better by trying anything different. They're so used to everybody else coming up with the same idea. Now, the reason for this is especially in big cities. Out in the country, you find a lot of people with nutty ideas, but they're kind of nutty all over the place. A little left, a little right. When you get into kind of what I call the high school effect, which is lots of people in a very small space that are forced to be close to each other, they all come up with many things that an impartial observer would find ludicrous. And I think that's kind of where a lot of that counterculture idea comes from. But I'm looking for that in markets, and a lot of times I probably spend more time on news than a lot of other folks in technical trading. But I kind of always looking for that. Steve Jobs said you can only connect the dots backwards. You can't connect them forward. And in what I'm looking for, a lot of times it's that. I want to see everybody on CNBC tell me how Boeing can only go higher. I want everybody to tell me why another stock can only go lower. And generally, since these guys are all together, they probably made a bad decision. In fact, one of the best, do I have time? One of the best descriptions of how to make good decisions is in a book called The Wisdom of Crowds. And in that, the author, Sir Wiki, I think is the guy's name, he came up with 4 ways of making sure that people could come up with really good decisions in corporations, and why people came up with bad decisions. But one of the things that he found almost universal about people coming up with stupid ideas and bad decisions was that they were all literally in the same place. So when we see people coming out with movies, and 4 movies all within a couple of months about an asteroid hitting the planet, or we see 5 movies all about firemen, or 5 movies all about something, it seems kind of weird that you get all those movies all together, except when you start thinking about it. And, you know, a 30-mile square where all the movies are made, everybody that's important lives there, and they all come up to many people that would think ideas that are ludicrous, and they all come up with them, and a lot of times they get gigantic bombs. But it's not uncommon, especially in Hollywood, for them to have horrible year after year, because basically they go back to what everybody agrees on instead of thinking creatively and probably doing a little bit better. That's moving out of that area, coming up with some new ideas. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, I don't know if I'm so much counterculture trader as looking for some kind of divergence between the crowd in Wall Street and, of course, the multitudes on Main Street. I think that's kind of it. So always kind of interested in that. Let's go ahead and look at some other ones. Earlier in the show, we had some questions about why some stocks aren't moving. And of course, these are traditional more stocks, but there's a handful of reasons why companies like 3M and some of these other ones are not bouncing all that excitingly. But I think we kind of covered it a little bit before, and that is we've got several major things happening in the market. Of course, in the last week, it's been all about tariffs, or the last few days anyway, all about tariffs. But we've got other big things, which is higher interest rates. And you can make a fairly decent case that higher interest rates will cost about a third of the EPS by the time that they get back up to standard levels, or let me put it this way, free market levels. In the meantime, of course, everything did not stay the same. We had a huge tax cut, and that's going to vastly affect the amount of cash that comes back into the United States, which is fairly bullish. We also have that money going back to shareholders, which is bullish. So like I said, I'm kind of rather bullish long term. What we're going to see is all these kind of different things kind of come out in the wash. It'll all be several rotations of people running from one sector to the other sector rotation. And of course, if you need lots of cash and you've got lower profit margins, you're going to be hurt the worst as we go forward. So companies that really have lots of infrastructure costs, companies like Boeing, or that have to, that have to pay lots of interest on their products, are going to be hurt, or going to be hurt more, let me put it that way. And of course, when we start looking at other companies, especially tech stocks that make 50, 60, 70% margins, so they pay another percent in interest, it's probably not going to matter. If Cisco sells a couple more routers, it's going to pay for all their interest. It's not a big deal. But if you're a grocery store, man, a 0.25% is a huge hit for what you're doing. So when we look at a lot of these, like Caterpillar, these are big infrastructure companies. And of course, we talked about Caterpillar and the deal not really going through. At least I don't think it's going to go through for infrastructure spending this year. Maybe next year there may be a chance. Caterpillar and some of these other big infrastructure companies have a few things going for them. One, they had a lot of that infrastructure spending kind of built into them back at the beginning of January. Now that it's kind of faded, not so much. And then, of course, any of those programs, any new buildings, higher costs in steel mean probably a little less building. Higher costs of steel also mean that maybe these giant 100-ton trucks that they make, if metal goes up a little bit, that's kind of a big expense to somebody like Caterpillar. So we've got to look at those several things: taxes, the impact of those. Of course, then we have to look at profit margins and interest rates. And I think those are the three things that we need to look at when we look at which sectors are hot and which ones are not. So hopefully that answers your question on why some of these things are not bouncing. Like I said, Boeing probably, it's up $6, but that's, it's not that far from its previous highs. In fact, you kind of think that maybe Boeing should, if really we were going to have a trade war, Boeing probably should have gotten hurt a lot more than it did. I'm not a big advocate of thinking that trade wars are, one, inevitable, or two, this is a bad idea. I think it's a great start to a negotiation percentage where people have just kind of shucked off the fact that everybody goes and loses their job in the Midwest. And, of course, they all work in Washington, D.C., so, no big deal. Those people are in flyover country anyway. And now we have somebody that actually saying, hey, maybe we need to reinvigorate our Rust Belt. One, it would be a great thing for our economy. Two, the Chinese are going to add about 15% in the next year to their military budget. Their thoughts are that if they can basically do the same thing that we did to the Japanese in World War II, i.e. cut off all their iron coming to them, that will not have really any kind of ability when they decide to take over Taiwan, maybe China, and certainly South Korea. Long-term, China's imperialism probably getting ready to show some fruition. They've thought about it for 20 or 30 years. In fact, Chinese are famous for thinking about things 50 or 100 years down the line, long after they're dead. But my thoughts are that, this is a great deal about, or at least the tariffs are a great deal about national security. We need to be able to make enough metal to go through any kind of protracted war. And of course, any weakness in that only means that those that would do ill to U.S. ideas are more likely to do it. I can only think of Britain acting cowardly with Hitler, only encouraged him, did not discourage him. And of course, pretty good Winston Churchill movie won the Academy Award last night for Best Actor. So let's look at some other stocks out here that were taken out. Again, I would like to see a lot more movement, especially in something like these IBB and some of these others. Some of these sectors are really kind of flatlining, and I suspect that's kind of what we're going to need for maybe a week or so. And into that week, we'll start seeing it. Today's bounce, I wouldn't be surprised if we kind of gave it back over the next couple of days, went a little sideways, kind of based out at around 2,700, maybe a little lower than 2,700, and then got into it. So let's take some of the stocks that I've been looking at and seeing how they are doing today. Give me a call at 877-927-6648. You can email me at path@tfnn.com or put a message in the den. Okay. Yep. Always exciting to have somebody with a different idea, or those people that continue to do the exact same thing and expect a different result. September 21st, $2.43 on Avanix Life Sciences. This one was kind of interesting to me. It is kind of a penny stock down here in the $2 range, but there weren't a lot of stocks giving big signals. Do like the way this thing came back and the way it kind of bottomed on this gap down at about 240, 235. You had 653,000 shares back on September 21st in 2016. Finally came back into 257,000 shares on February 28th. We'll talk a little bit more about this when we come back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Okay. Anyway, not a lot of stocks giving signals, and that's why I'm all cash on the daily right now. I'm waiting for something to line up. That we got a bounce, not surprising that we got this big a bounce, kind of surprising to me. I didn't see this much in a single day coming out here. Looking at some other stocks, January 18th on PTC, saw a little spike into 74.88. A little less than 4 million shares on that day. Today, we're breaking through it with 427,000 shares. Energy off this February 9th low, not all that exciting. TLGT, another one out here in the dollar range. $2.82, November 7th. For IGI Laboratories, November 7th, that low. What do you got? 8.5 million shares. You're back into it right now with 292,000 shares. Energy off the December 12th high, which was decent. Came into this gap down that came in with 8 million shares on 2.7 million shares. So this may need to go a little sideways, but, you know, 250 to what, $4? Probably not a bad trade. You need to close back above 282 with light volume, which you're probably going to get. And you probably even need maybe a few weeks, if not months, of consolidation. But we shall see. Keep an eye on that one. Twilio is breaking out through this consolidation range that went through about $35. You had a good day on Friday with 7.3 million shares. Today, 3.3 million shares. Now, you were wanting to get through this 8.5 million share high back on February 13th, and this 12 million share high on August 8th. So I'm watching Twilio to see whether or not this one fails and comes back in. We all know that housing starts are slower. Man, am I thinking the wrong stock here? Let's read the profile on this. Provides cloud communications this is the cloud communication company. Build, scale, and operate communications with software applications in the cloud in the United States and internationally. So I am wrong. Twilio was founded in 2008. Okay, I'm glad I looked at that. Sometimes even I get confused. Anyway, we're back into this high that goes back on Twilio to November 21st of 2016, that had 7.3 million shares. So you're basically kind of getting into that area with the same energy. You never really got the kind of energy off that August 8th and February 13th high. But actually, since I'm all wet on this one, what you did have almost was a great test of the low. May 8th, 2280 was 7.4 million shares. You only got to 2325, and you ended up with a third of that volume on February 9th. You kind of got into that candle, but you never proved the point. Energy wasn't that exciting off the August 8th high back into this low. It was a little bit too much. But things change, and in this one it did. You're back up to probably the worst part of resistance. If you can continue to go, this thing goes to about 44 bucks on Twillo. UTHR. Back here, United Therapeutics, UTHR. April 26, 112.02, 112.01. Yeah, it's April 26, 2017. Spiked down there, 1.7 million shares, into it with a little less than 200,000 shares. This is United Therapeutics, UTHR. So we're going to keep an eye on this. But if we do get some kind of decent rally in the marketplace, these are the ones I'm kind of looking at. Okay, and let's go a little shorter time. Westport Innovations. We've been talking about how inexpensive natural gas has been for a while. Westport Innovation takes regular trucks, pickups, and that kind of stuff, turns them into CNG and buses too. This actually went up from the December 4th low to the January 2nd high with some fairly decent energy, had a nice 3.5 million share high. It's pulled back on lighter energy, and it's tested that December 4th low that had 1.3 million shares with half the volume, a little more than half the volume, 700,000 shares on Friday, spiked through it, closed back above it, and you got a little tick out here. Again, this may need some level of movement, but a lot of people have been talking about natural gas going higher. I don't see how it does, at least through the summertime. We'd have to have one hot summer. But liquefying natural gas companies, other companies like Westport Innovation that convert cars into natural gas, if natural gas is going to continue to be this cheap, what are the other winners in this sector? And well, I think you got to take another look at Westport Innovations. This may need a little bit more in the way of consolidation, but interesting. XXII, which is the 22nd Century Group, you got a lot of people out here. February 6th low, $2.41 with 6 million shares. And you did go through it. You closed, or you went below it. You've closed back above it on Friday. You did so with just a little under 2 million shares compared to that 6 million shares. You did have a nice bounce with more energy up to the February 15th high than you did back to the March 2nd low. So, there's a handful of these stocks. In fact, a lot of them seem to be the kind of these penny stocks. And they came down fairly hard. They're going to probably consolidate out. The big news is a lot of people are going to want to trade things like IBM and Boeing and all the big well-known companies. Eventually, these penny stocks will have their day in court, and normally they far outperform the rest of the market. Okay. Let's take a look at this. 4.3 billion shares on the CBO equities market volume. In fact, if you want this and you want to track volume during the day, you can always give me a email at path@tfnn.com. I'll be glad to give you the link. But if you really want to see what's going on in every market and the totals of it, this is probably the best page to go and look at. We're up 30 points on the S&P cash, almost 31 points at 27.21. As I said, I'm all cash here. Kind of surprised by this bounce. I was hoping for more sideways action instead of everybody plunging right back in again to a higher market. But we shall see. Be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yeah, we're talking in the den about movies and history, and I don't make any claim that many history movies have much to do with history, and they're going to come close. And probably the worst thing is that a lot of people do confuse movies with actual history. But there's a great channel on YouTube called History Buffs, where a guy literally takes 30 minutes and tears apart the movies and goes through them. And I don't always agree with the guy, but it does make you think a lot about what happens. And I mean, this is all kinds of movies, but if you're really interested in history and you enjoy maybe seeing the movie, he tears apart a lot of these, and I think it's well worth the time. Much better than a lot of stuff I see on TV at night. I mean, these things, I mean, he tears them apart. I mean, 30, 40 minutes goes in depth with them in the actual history compared to what was in the movie. So I do like it. Okay, anyway, we looked at that. Let's go ahead and look at a few others before the end of the day. Amazon pushing up again. We want to see the volume at the end of the day, 4.1 million shares. You need about 11. It went above it, closed back below it. It's trying to push once again above it. Now, maybe it chews through this $1,500 level. Maybe it doesn't. I don't think I'm not sure how you would make a prediction. I think you got to wait and see how this actually works. But it is kind of interesting to see that this isn't blowing through, especially today, blowing through this February 2nd high that had 11 million shares. That's why I continue to think maybe we're going to see some kind of consolidation. Maybe we saw far too many people get short and we're getting another little bounce. But I think we're going to get a few of these until the market kind of settles down. And then we're going to have a real direction in the market, but it may take a handful of more days. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.